everybody's doing well and excited to talk about taxes, everybody's favorite topic. It is something everybody has to do. So yeah, we're going to present New York, New York. It's so nice. They don't care if we are taxed twice. Talking about domicile, residency, and the possibility of getting taxed as a resident by two states. And this will apply, I would think, to a lot of your personal lives as well as to hopefully clients of yours who may run into these issues. I am Scott, by the way, the son, and the bald one is Gary. So we're going to start just talking about residency and what it means and what New York kind of uses to determine it. So there are two tests generally, the statutory residency test and the domicile test. So for the statutory residency test, well, before we get to that, why is it important? Why do they care if we're residents or not? They care because if you are a resident of New York, you have to pay taxes on all of your income on all your income worldwide. You have to pay in New York, and if you're a resident of Yonkers or New York City, you have to pay those rates as well. So New York wants more money, and they're going to try to get it from us. So the statutory residency test. Under this test, you are considered a New York resident for tax purposes if you maintain a permanent place of abode in New York and spend more than 183 days in the state during the tax year. A full day for these purposes means a calendar day during which you're present in New York for any amount of time. So we'll get more to that, but any amount of time pretty much means any amount of time. And then the domicile test is where it's based on where you have your permanent and primary residence. If New York is your true and fixed home, even if you are not physically present here for 183 days, you may be considered a resident for tax purposes. Again, full day means any portion of a calendar day. So there's a lot of terms of art here that if you want to go through some of these, because they use a lot of these words. What do they mean?
Okay, first of all, there is one exception, and that is if you're passing through the state to get to another place. In other words, if you live in Newark and you have a house here in New York and you pass through and the only stop you make is JFK Airport, that is not counted as a New York day. Do not stop and go to a luncheonette and get a bottle of water. That will put you back in New York for other purposes, and they will then count that as a day. In New York loves to tax us, and most of these definitions and policy come from back in 2008, when New York State started to issue certain tax memoranda. And the rationale was New York and New Jersey were fighting over who gets taxed where, because people at one point were not reporting their work at home days as New York days. So there was this, a gap of at least 2% between New York and New Jersey. And you wanted to, pay less if you were a Jersey resident, even if you had a pied-à-terre in New York. This has changed because Jersey's tax is almost the same as ours, but we'll get to the real reason for this seminar in a few moments. So you cannot be a non-resident of New York by 183 days, but still be domiciled here. Let's take stupid client number one. In 2008, had a client, he believed his domicile and residence were in Pennsylvania. He and his wife had a pied-à-terre in New York. They spent less than 183 days in New York. No problem. They had a lease on an apartment, so it wasn't easy to find. New York audits them based on their days out of state. And at the end of the audit, they say to me, Mr. Reing, your client was domiciled here. I said, how can you say that? We showed them electric bills, credit card bills. What did idiot client number one do? He registered to vote in New York out of the New York apartment. That was clearly an intent to be domiciled in New York. And I asked him after, I said, why'd you do that, Joe? He said, I wanted to be able to vote for Obama, and I didn't want to have to go home to Pennsylvania for it. It only cost him about $8,000 plus penalties. So, generally domicile, you have to intend this to be your permanent home. How do we determine that? Most people think all you have to do is be out 183 days, change your voting, change your driver's license. That will do. But that's not enough. What will they look at? They will look at your phone, see what cell towers you've tickled, where your library card is, where your car registrations are. Do you have a car in both states? Do you pay on the other car in the other state? Do you pay your insurance there? Is it all under one policy?
Do you belong to a church or a synagogue? Where are you members of for your house of worship, something like that? They're gonna try to get you to show that you intended to be here.
They will even check your gym memberships and the days you spent there. Why would you have a gym membership in New York if you're domiciled in Florida?
It's a great question. I personally was a member of 24-hour fitness for 4 years without going one time. So I don't know that New York can get us on that, but that is something that they can look at. Absolutely.
Right. And I am a Florida resident. New York looks at my gym memberships. I did go to 24-hour fitness this morning, but I may be there 20 days a year. And the rest of the days I can document that I'm in Florida with no problem. And I own a home there. And I happen, because it's Florida, I have a certificate of domicile on file. Always useful to have. And a year after I was domiciled, I can file for homestead. And yes, no, you can't file for STAR. Where's your STAR? Are you applying for STAR in New York? There's a lot of factors. Basically, what New York State courts have said when it comes to domicile is home is where the heart is. Where do you want to be? What do you call your home? Okay. Permanent place of abode means an actual residence. What if you don't own it and you rent it? Well, doesn't matter. It's still a permanent place of residence. It's an abode. If your spouse owns it and you don't, it's still a permanent place of abode. One of the cases in the last several years had to do with, is it suitable for year-round use? And this involved a vacation home in the Adirondacks that did not have running water. It had a water tank. Well, you can't live there in the winter because the water in that tank is going to what? It's going to freeze. So that one, the taxpayer was able to succeed as a non-resident, non-domiciliary.
That same taxpayer would have had an issue, right? If they tried claiming that Adirondacks house instead of living in New York City, they would have had the reverse issue, where the state could have said, well, you couldn't have resided, or that could not be your permanent place of abode because you can't live there from November through March. So that would be certainly an issue.
And it's interesting, while we're down here, mainly in the Westchester area, those of you who are familiar with Lake Peekskill for years did not have running water. You had a tank during the summer. It was truly a summer vacation home community in places. And today that's not an issue. They do have running water, but that would have been an issue with New York City.
So we just have a quick question, I think, in the Q&A. So what if wife lives in Florida and husband in New York? If that's the case, then for your state tax return, even if you file jointly on your federal, you're going to file separate state tax returns, married filing separately, with the husband saying that he's a New York resident and the wife saying that she is a Florida resident. But the wife is still going to want to keep pretty close track of her days, of all of her intent items. So if she is audited, which I would think is probably going to be at a higher probability than a non-resident at all, then she'll be able to prove it.
We have the opposite situation. My wife is going to remain a New York resident. Why not? She'll pay on her half of the investment income, and she has a New York State pension, which is non-taxable. So you also want to weigh what the economic realities for a couple are. One of the interesting, odd things that New York State has defined for us talks about undergraduate students. They have a permanent place of abode, generally in their parents' home, wherever in the United States or Europe or any other country may be. They adopted an amendment back in 2018 that allows students to be considered a non-resident under certain circumstances. And it applies to New York State, New York City, and Yonkers taxes after December 31st, 2009. Prior to that,
go ahead. No, you go ahead.
Prior to that, they didn't get it. Talk about max deduction, Scott, your friend.
Yeah, so max deduction, that's a name I came up with, very proud of that. Max deduction, an out-of-state student comes to the Big Apple to enroll at NYU. He moves to New York in August, lives in the dorms on campus, somewhere on Lafayette Street probably. He only returns home to any other state, whatever that is, for short visits during the holidays and summer break. He also secures a part-time job in New York to help cover his expenses while he's in school. Max intends to complete his undergraduate degree in New York and has made no plans to return to his home after graduation. Is he a resident? Maybe. So again, they're going to look at this guy's intent. Does he plan to stay after college? Is that job necessary? Is he showing that he's going to be there? So while the rules change, there's still no. They're still going to look at your intent, because New York is going to find any way they can to try to grab you. Now, in this scenario, it probably doesn't matter because Max here is going to pay New York taxes on his New York income while he's working. And in this scenario, he doesn't have any out-of-state income. But if he did, it's going to be something he's going to want to make sure he can show the intent that he is just an undergrad student here for school.
The flip side is our graduate students. You're a graduate student at Stern because we're playing with NYU today. And you're making 30, 40,000 in the summer as an intern for Chase or some other company. If you're here 183 days or more, you're going to be a statutory resident because this exception we just talked about only applies to undergraduate students. I have dealt with many foreign students over the years who were at Stern, who are from Mexico, other parts of South America, and they are taxed as New York residents while they're in graduate school. Their income is here. They're here more than 183. They have a permanent place of abode, and they get no exception. Okay. What do we want to set forth to make you a non-domiciliary, a non-resident? Okay, again,
there's just another question to follow up on the husband and wife thing. So the question was, there's no income tax in Florida, so the husband and wife can't file separate state income tax returns. That's not true. So first of all, the New York resident would still file married separately in New York. And if the non-resident has some New York income, they're going to want to file a non-resident New York income tax return. So there are going to be two state returns, hypothetically, if there's New York income for the Florida resident, one as a resident taxpayer and the other as a non-resident taxpayer filing separately in New York.
Quick example there. Client has their permanent home in Connecticut. Husband works for a major national law firm that has offices both in New York City and in Stamford. The couple has a pied-à-terre in Lower Manhattan. The wife works in the financial industry, and she is definitely in New York more than 183 days. She files as a New York resident. He files as a Connecticut resident and New York non-resident based on the days out of the New York office. He got audited on this. And because he's a friend, I didn't represent him, but I did advise him, and he won by 2 days on the residency issue. So that worked. If he was in Florida going back and forth, he would still pay on his New York earned income when he was here. So even though he's a Florida resident with no income tax return required there, he would still be filing that New York non-resident tax. Since then, he has moved to Utah, which has a much lower tax rate. Okay, so how are we going to prove this? Easily, you want to treat somebody who had been domiciled in New York as a non-resident if they had no permanent place of abode in New York State. What if they lived in a hotel? What if they lived at the New York Athletic Club? which has residences? What if they lived at the Princeton Club, which I don't know if it's still open, but was on 43rd Street and has residences? Two, they would have to maintain a permanent place of abode elsewhere. They would spend less than 30 days in New York. And that's those absolute days Scott talked about. However, if they're not domiciled here, they will still be taxed as a resident if they spend more than 183 days. And by the way, this 183 applies to the city as well as the state. I've had a number of New York City audits where some of the proof issues that came up were electric bills, cell phone bills, credit card bills. Where did you charge something? The last one I had, we had a situation where the credit card bill showed charges on a Sunday, and my client was never in New York City on a Sunday. However, his child's pediatrician billed all their patients' parents on Sunday nights. We had to get a letter, notarized letter, from the doctor and his office showing that that was the case, and they were not present in that office. New York loves money. What can I tell you? Okay. Permanent place of abode is common sense. Student housing, we just talked about with the undergrad situation. I believe that if you have an apartment off campus, that will also count if it's not for a full year, if it's clearly based on student time. 2009 amendment to the code includes a dwelling owned or leased by your spouse, maintained by a full-time student enrolled in an institution of higher education in an undergraduate program leading to a degree. A bachelor's occupied while attending is not a permanent place of abode for the student. Again, does not apply to the graduate student. Okay, New York State and New York City both ascribe to the New York State rules when it comes to this. So you can replace the New York State words in any of this material with New York City or Yonkers. Interesting question. What about summer internships? When you pay on it anyway. Okay. What's going on today? The reason we bring this up is COVID. What happened in COVID? If you look at the back,
this Zoom, right? For COVID, instead of being in person somewhere in Westchester, we are doing this CLE from Zoom, which is the same as a lot of jobs, right? Instead of coming to the office, you got to work from home. But if you lived outside of New York State, working from home did not necessarily and does not necessarily mean that you're not working in New York State, right? That's the whole crux of kind of what we're getting to here. So how does New York treat, for tax purposes, non-residents and part-year residents who are working from home? And the answer is, it depends, like every other piece of law in New York and otherwise. So first, New York is going to look to the convenience of the employer test. Why are you working from home? And if you are working from home because, well, it doesn't really matter one way or the other, that's not really for the convenience of the employer. And New York is going to say, no, that's a New York work day. Just because you could work from home doesn't mean that you had to work from home, right? And that's kind of the difference in these items. So what did New York do? The pertinent part of the section reads, if a non-resident employee performs services for his employer both within and without New York State, his income, the taxpayer, his income derived from New York State sources includes that proportion of his total compensation for services rendered as an employee, which the total number of working days employed with New York State bears to the total number of working days employed both within and without New York State. However, any allowance claimed for days worked outside New York State must be based upon the performance of services which of necessity as distinguished from convenience, obligate the employee to out-of-state duties in the service of his employer. And that is, in a nutshell, the convenience of the employer test. Go ahead, then.
Right, and that's directly from the Tax Services Bureau memo. Okay, so let's look at two situations that occurred with our clients and that I am dealing with the audits. One was Google. What did Google do on the west side of their offices? Well, on March 20th, they closed them. They closed them completely and told the employees verbally, you cannot come to the office. The office is closed. You must work from home. And that continued up until at least June of 21 when they partially opened. So my client, who was a Google employee, a coder, and let me say this anecdotally, we haven't seen this order for anybody making less than $250,000. Okay? New York is not going to waste time and resources where the recovery from New York State taxation is going to be minor. So client is a New Jersey resident who works in New York and previously was declaring all his income in New York because it was all earned in New York. What does he do? COVID comes along. The year before, he and his wife had bought farmland in Indiana, which is where they're from. And they decide before COVID that they're going to start building their house, which they start doing. And they move to Indiana after Google closes in New York. They let their Jersey lease go. They have a release of lease. They have a termination letter. And they go to Indiana, and he's working from there. And just as a fun note, his wife is the only client I've ever had who, on their return, has slaughter expenses because they now raise chickens and kill them and sell them. At least she does. Interesting. Okay, so we declare his income in New York through March 20th and of 2000, year 2000. And for the rest of the year, we're going to say he's an Indiana resident. He was told by Google he can't come in. New York audits him. And by the way, the spread here, because he made around $400,000 all in, the spread is about $20,000, $27,000 in New York State tax refunds that he should get. So it's sort of worth the risk on his part and definitely worth New York's time to try and recover that. Okay. We get the first notice, which is in the exhibits, which asks for a breakdown of the income. Where was the income earned? How was it earned? And he fills that out and sends it in. And New York has decided that, well, he worked from home. Where's the letter from the employer? If you look at the letters at the end of the exhibits, you'll see two letters from Google back there from his immediate manager. Google itself would not give him a letter, nor would Human Resources. And the only reason for this that I can perceive, knowing the building was closed, was they wanted to maintain the write-offs for his and everyone else's income on their New York State corporate return. Reduce Google's taxes in New York. So we have those two letters, and at that point, the state says it's not enough. The audit is completed. They say you're not getting this back. They gave him they gave him some refund, but not the full by any means. And we applied to the Conciliation and Mediation Service of New York State for a hearing and further proceedings. Okay. If you're going to represent a taxpayer, the fact that you're an attorney and they're a client is insufficient to get you access to the New York State processes. You need a New York State power of attorney, NYS1, and there's a special box on there if you're also doing a conciliation and mediation program. So make sure you have that and file that. when you put in your request for the conciliation mediation process. Okay. That's him. We'll come to what happened with that and what's still happening with that process in a bit. The other letter that you'll see at the back of the package is from ABC. Here, our client was a producer for The View, working in New York. He was here less than 183 days a year. We never had an issue with his non-resident time, even though he was on the New York payroll. He lived in Illinois. His wife and children lived in Illinois. He would go back to Illinois for months at a time because, believe it or not, all those shows are not live. And we get the same notice. We do the same work in terms of preparing. New York State says, you're still a New York taxpayer, even as a non-resident. They weren't questioning his non-residency or domicile. They were questioning convenience of the employer. Well, thank God, a year later, as this process is going on, we get a letter from Disney saying to us and New York State that we told this taxpayer to go back to Illinois and work out of a sterile studio in Chicago, which is near where he lives, as the ABC facility in New York was totally closed except for essential news personnel. And this taxpayer, it took a year and a half, but he got his refund check for $2,000. Believe it or not, the 2001 is still pending. So, Indiana guy, we have had a proceeding for 2000. We had a hearing in White Plains. And one of the things that came up and is starting to spring up with other states is just prior to the hearing, the tax advocate for the New York State Department of Taxation and Finance asked for a breakout of his compensation. And he got me his last pay stub for the year. And what it showed was wages, bonus, restricted stock option exercises. Well, we sent that to them. They then asked for the vesting schedule for the RSUs. Guess when they vested? In prior years when he was a New York, fully a New York employee. And the bonus was paid, but based on 2019. So New York's going to get paid on that. We're still litigating and trying to settle on the rest of his income. But I will tell you, no client that we have who exercises RSUs tells us that's part of their income. If it's an employee stock option, there is a code in the W-2 showing those proceeds that are included in the W-2, but not the restricted stock units. And I will tell you, New York and California are becoming very aggressive on these RSUs. So if your clients have them, you might want to save them some time and some cost of representation by letting them know they should get that breakout to their tax professionals.
And sometimes what will happen is somebody will be working in New York and then they'll move. And then they'll have these exercise RSUs come in in a later year. And let's say that employer actually puts New York on the W-2, which is correct. That is New York income. It was earned in New York. But what happens for New York? It will show as all of the income from that W-2 in New York. And then you'll have to manually take it out to show that there were less New York days. Most of the time, it doesn't result in audit, but it will show that somebody who makes $400,000, even if they had 20,000 RSUs vest from New York work, it will show all $400,000 of income on that W-2 in New York, as well as all 400,000 in Missouri or Kansas or wherever that person moved to. So just need to be aware that you'll have to then work that back out on the backside.
And I'll tell you again, I mentioned California. I have a client who lives in Hawaii, who actually now has moved back to Nepal, where he's from originally. And California is billing him for RSUs that were earned in California, but exercised when he was a resident of Hawaii. Now, hopefully, we will determine what the right amounts are fairly quickly, because while he declared that income in Hawaii, California wants their share. We will get a credit for the taxes he paid California on that same income. He won't get double taxed. But where might that happen? That could very well happen where somebody is claiming residency. Let's go back to my Connecticut, New York case. Lawyer client claims Connecticut residency. Let's assume that New York was able to show or tried to show or decided that they were going to bill him based on the pied-à-terre and days in New York. Let's say he didn't have those extra 2 days. Well, Connecticut is not going to turn around and say, okay, you're a New York resident and a Connecticut non-resident. He's going to get taxed in both states. And this has happened a number of times. There's case law in Connecticut saying we're not going to recognize an amendment of your change of residency based on New York's findings of residency.
It makes sense because there is no change. And this person swore under the penalty of perjury, they signed their return saying they are a Connecticut resident. They were in Connecticut for 290 days. They were there every day. They lived there. So just because New York is also going to determine, maybe correctly, that they were a New York resident won't save them from paying both places the full rate.
So that's no fun to pay 2 states in full. In my Indiana case, I'm hoping we can finish this audit, this proceeding conciliation mediation in the next month or two, so I can amend his Indiana return and get him the tax back that he paid Indiana on the RSUs and the bonus. We do have
just to be clear, that's different because those are actual New York income that he could then get a credit for in Indiana, separate from what we're saying with the Connecticut case, where the person was a Connecticut resident, said they were, and then New York also comes back and says they were.
And to be sure, when we know about RSUs, we're going to be asking this question going forward, so we don't end up in this situation where a client's going to owe, significant interest and penalty. New York's taxing him. I don't know what the interest rate is this year. I haven't looked at it recently, but it's been 8%. It's a lot of money. You're not earning 8% on your money, for the most part. So, finishing up with Indiana guy, I proposed a settlement at the conference based on his salary alone, saying, okay, we'll pay on salary through March 20 because I have those 2 letters that's in your materials saying that he couldn't come to the office, that he had to work from home, and again, from the manager, which hopefully will be deemed sufficient. And it came out to about 20% when you take out the bonus and the RSUs. I heard back from the advocate saying he'd be willing to settle for 30%. We'll see. We're going to talk again later this week. Fortunately, my client was put on the Indiana payroll of Google as of February of 2022, even though he hasn't set foot in New York for a day since March 20th. One thing the advocate has made clear, that if he settles for 2020 with me on the basis that we have, it doesn't mean that New York State will be bound on that for 2021, because 2021 we showed no New York income. Again, we're going to examine the RSUs. It doesn't make sense to amend, which we might have done at this point. We'll see what they argue on the bonus. Does he pay on the a share of the bonus from Jan 1 to March 20? We'll see. But hopefully, a lot of those RSUs. Actually, I have the schedule. A lot of those were earned after March 20th of 2020. So there'll be an adjustment for 21, but we don't know how much. One of the other examples we have in the materials has to do with our client who is a citizen of Spain, works for a major international law firm out of the New York office. But in 2020, he had no permanent place of abode in New York. He sublet for a month. He stayed with friends. He was in Spain for close to 6 months. He was in South Carolina for a month and a half. And frankly, when he was in Spain, he was there on a matter for the employer. We have, at this point, for 2020, they can't hit him for domicile, although they keep mentioning it. They certainly don't have residence. They have 110 days in New York in 2020, which includes from January till when the office closed. What they originally wanted was a full adjustment for New York State and New York City. The settlement we offered, because again, he was kept on the New York payroll and the employer will not give him any letter saying that he was out for their convenience, is we won't pay the city tax, but we will pay the state. And he's okay with that. And again, he's a high earner. That's why it came up. So we have those issues. There were no changes in New York State policy for COVID, what it came down to. If you, by the way, have a client and you're preparing their return and you try and e-file with New York State W-2s, but show no New York State income, you can't e-file it. New York State will not accept an e-file for that. You have to send it in on paper, which is basically based on your client's income, but it will result in an automatic adjustment or review. That they will not do. So you need to be aware of that. And the client needs to be aware of that. We get paid to do this stuff. We're not looking to make a lot of money on it. Other proof issues in having these reviews and conciliation procedures. What you want to do is have credit card bills, lease or ownership documents. They asked us, by the way, in the Spanish case for the sublease, phone bills, utility bills, bank statements and canceled checks, ACH payments from canceled checks. I mean, people who use debit cards, it shows on your bank statement. Where did you do it? If it was the deli on 46th Street, you were in New York that day. School statements and medical statements for children. This is always an interesting one. What if the kid goes to private school or boarding school? It's going to be an interesting argument. But you, as counsel to a client who wants to be a non-resident and non-domiciliary of New York, need to emphasize that it's more than just driver's license and voting. Like I say, Florida at least has a domicile affidavit that I filed when I completed my move down there. My library cards are there. I have doctors there, even though I have New York doctors as well. That'll be interesting. My car is registered there. My insurance on the car is there. I'm there more than 200 days this year, so I certainly have that. And yes, I have a home in Westchester. And I'm still on the deed. And we'll see what happens. It'll be interesting. If they come after me, I'll have Scott represent me. He's much more convincing than I am.
And so, you'll come across, of course, people moving and trying to say they're not a New York resident. But what's more common, I think, is coming across a taxpayer who does not live here and wants to pay as little as possible in New York. And again, going back to working at home. So when can working from home, other than in the revised employer convenience test, when can they say that is not a New York workday? Well, they have to show that their home office was a bona fide employer office in those cases. And there are a couple of ways to show that. There's the primary factor, which I'll talk about in a second, and there are secondary factors. And you need to meet a lot of the secondary factors and other factors or the primary. So let's say somebody wants to work from home, or no, they want to, they have to, and they're claiming it's a bona fide employer office. It's not just their home. So, what's the primary factor that they would have to meet? Um, the home office contains or is near specialized facilities. So, if the employee's duties require the use of special facilities that cannot be made available at the employer's place of business, but they are available near the home, then the home will meet this factor. So, for example, if the employee's duties require the use of a test track to test new cars, and a test track is not available in Midtown Manhattan or near the employer's office, but is available near the employee's home, then the home will meet this factor. Alternatively, if the employee's duties require the use of scientific equipment, special equipment that is set up at the employee's home or near it, but could physically be set up at the employer's place of business, then the home would not meet the factor. So it's a pretty tough and niche factor, the primary one. But there are the secondary factors that they can meet. Now, just to answer a quick question, what are some of the red flags that might cause New York tax authorities to audit somebody who is earning money in New York but filing elsewhere? Um, we tend to shy away from using the phrase red flags because that kind of makes people think that there are definitive ways to avoid audit. Making a lot of money is probably the easiest way to get audited. Just making a ton of money that there are high stakes for everybody involved. So
I'll give you, go ahead, finish up.
you go ahead. Give an example.
I'll give you another one. It's not a red flag, but it's a trigger, I would call it. You're an independent contractor and you work primarily in New Jersey. This is sort of shown to us in one of the cases, one of the questions and answers. And things are tough. You go and claim unemployment and you claim it against your New York payer. That could very well trigger a look from New York because your payer who issued you that 1099, yes, issued it to you in Morristown, New Jersey, but you're claiming you were a New York employee for unemployment purposes. Now, first of all, independent contractors, except during COVID, couldn't claim for unemployment, but believe me, they do on a regular basis. And the employer then gets an inquiry and they don't want to pay on you. So they're going to work with you, the independent, to prove this elsewise. But I will tell you, in the recording industry, I have a couple of jingle houses as clients. This happens all the time. And it happens for as little as an $120 session fee that a person who's an independent who digitally prepares a track in New Jersey and digitally sends it to the New York studio to be incorporated in a composition, then applies for New York unemployment based on that because New York pays more than New Jersey. So that could be a trigger.
Hi, everyone. I'm just going to pop in and give the code word for this lecture. The code is Gary Taxman. The code word is Gary Taxman, and I will also type it in the chat. Thank you.
Thanks, Diana.
Two other they're interesting to me, items that come up with residency, non-residency, and moving. The first is if you've ever helped a client sell a business where they took back a note, which we call which is known as an installment sale. What happens if they sell that deli in Portchester? The New York residents, they pay each year on their percentage of monies received on the profit, and they move to South Carolina. Well, they owe the rest of the tax on the rest of the profit the year they move out of New York. This is old New York state law. It sounds awfully unfair because they haven't received the profit yet, but yet that is New York state law, and they have to pay, and they will, by the way, get billed. I've seen this on several occasions. The other side of that coin is, what about a 1031? Client sells their apartment building. They remain New York residents. They buy property in Florida, like-kind property. They move to Florida. They sell the exchange property at a significant profit, they're going to pay federal tax. Are they going to pay New York on the deferred gain? Not under current law. And I've mentioned this to a state senator saying, don't you think you guys should take a look at this? And never got a response. So there's that. Like I say, interesting to me, but not to most people.
Well, I'm hoping it's interesting to all 261 attendees of today's CLE.
I think there's. Go ahead.
You go ahead.
There's one question left in the Q&A about 1099ers still able to claim unemployment as during COVID. The answer to that is no.
The one exception though is if you claim it and you show that you were treated as an employee. In fact, then you could receive unemployment, but you're also going to cause a lot of issues because then there's going to be payroll tax issues. The employer is going to run into a lot of trouble if they were in fact paying you on 1099 while you were an employee. So for most people, no, you can't claim if you are only on 1099 or a contractor. But if you do and you try to fall into the exception, you're going to have an uphill battle and probably a lot of conflict, both with the state and the employer.
I mean, the flip side is if you claim as a 1099 employee and even allege that you were, an employee as opposed to independent, New York State will find against your employer as a matter of course, because it's a revenue generator for them. That causes more unemployment audits than anything else. And we've had those over the years. And we'll continue to have them because what do you want? You want your money. Okay. I see a question from Lee about the assistant retiring, terminated all New York State contact, relocated to Florida. They're working remotely. Her 2023 earnings, if she is not present in New York at all, she should not be filing New York State taxes on that.
When you as the employer give her a W-2, if you show that she has New York income, that's going to be New York for her as well. But that goes back to the question on what is working from home automatically taxable in New York or not. We can go to those other factors, and there are a ton of factors in the material, so feel free to look those over. I'm seeing a question about if you buy a home in Florida, could you put your spouse on the deed in addition to both being on the deed in New York? Yeah, you can be on as many deeds as you want.
Besides which, if you don't put your wife on, you're putting your life at risk.
That's right.
Okay, 1031 to a trust. And if the trust is New York, it's still going to have the deferred basis. If the trust is located in a different state, I suspect it will be tax-free in New York upon the final sale, as long as the trust doesn't have a New York presence. But that's a best guess. That's not a researched answer. All right. Anything else? Oh, we're 10 minutes early. So we do this pretty much once a year for Diana. It's always a pleasure to work with Judicial. They're also our title company of choice. So give them a quick advertisement.
Thank you.
I think that after the 24 election, we'll be preparing another program of, I think it'll be our crystal ball for what happens when the Trump tax bill sunsets at the end of 2025. We won't have any finite answers, but we will give and discuss with you our best guesses as to what happens after that. Some of the provisions do have specific solves and what happens after. I promise you that Scott will have a proper clock behind him the next time, because in the chat we had 2 comments about that.
Yeah, just to be clear to everybody, this is not a real background, okay? This is just, it's like a green screen. So the clock is not real. It hasn't moved at all. So I appreciate the concern. I'll make sure that we can get that updated. Sander, hello, by the way. And the materials, Diane, I think you either did or will send the written
Yes,
material.
I will. If you did not receive the materials, after the lecture, I'm going to compile a list of everyone. I'll send the affirmation, evaluation, and materials to everyone who attended this afternoon again.
Okay, and the only thing I want to close with is if you have a client who comes to you, their accountant or whomever didn't succeed on the initial application to the state on this working from home thing, and you ask the right questions and find that there's a potentially legitimate home office, like if there was no place to work in New York, which by the way, New York doesn't seem to care about, take a shot. Put in the conciliation request, and I will tell you, most of these settle because New York State doesn't want to go to the tax tribunal in Albany and lose. Same thing with IRS. I've been to tax court many times over the years. We have never tried a case. They always settle, especially on cases of first impression. So just to wrap up, New York and Massachusetts have been the most aggressive states in the Northeast regarding work from home being taxed in the employer state. New Hampshire petitioned the Supreme Court to overturn the Massachusetts law, and the court refused to hear the case, stating basically that it was a temporary law and not something that should go to the Supreme Court, even though it was a ripe controversy between the states. Plus, nobody who's sitting on the Supreme Court cares anything about tax law. They're not interested. You have to have somebody who's been in the business. If Scott's on the Supreme Court, he will take tax. He will grant certain tax cases.
I can promise you I won't be. And the last thing is that I'll say is something that I'm sure all of you, regardless of what you practice, is advice you've given to clients. Talk to an attorney if you have questions going forward. So the last example that I have is a client of mine. He invested in a startup. He was living in Texas, okay, so he didn't have to worry about New York at all at that point. He later moved to Brooklyn. He lived in Kings County, highest tax rate in the country. In February of 2020, he was told that there was a very high likelihood of getting paid out for that startup investment, somewhere in the seven-figure range. Okay, so there's going to be significant tax, 10+% to New York and New York City combined. He didn't want to pay those taxes, so he asked me what he should do. Well, I said, leave New York as fast as you can. So he moved to Florida in April of 2020. He changed the title of his car. He changed his driver's license, changed his voter registration, broke his lease, ended his gym membership. And when the income was actually eventually received, he was a Florida resident. We filed his part year return from January 1st to April 30th that year, and no tax was due on the seven-figure payout. That was all legitimate. It just took some planning. That payout could have never come. As many of you know, startups don't always pay what they say they're going to, but it did come, and there was nothing due on that at all because he did take those steps to get out of New York and not give New York anything to hang their hat on, so to say, to collect on that payout. That's it for me without any further questions.
All right, sounds good. Thank you all for coming, Gary and Scott. Thank you for an informative and entertaining CLE. It's always a pleasure to have you. We look forward to a 2024 update from you guys. And have a great day. Have a great Thanksgiving, everyone. And we will see you in December.
Happy Thanksgiving. Thanks, Diana.